Assalamualaikum warahmatullahi wabarakatuh. My name is SITI AZREEN binti AHMAD NIZAM. My matric number 2777907, and I will continue in market penetration, which is our local bank Malaysia to penetrate in Indonesia bank or Indonesia market. So in this part, I will explain about the pro, consequence, risk and challenge. Alright, for the pro part, which is the good thing that we can get from the penetrate market is expanding market size. As we know, if our local bank only run in Malaysia, our market population is only 32 million and 700,000. But if we penetrate our market in the Indonesian, we can have plus population, which is 297,026,366 Indonesian, which is a good point for our local bank to being further. And the second point is encourage investment. When local bank can penetrate Indonesian market, which has a large population and various type of sector, it will open the new investor and investor that already invest in our local bank to invest more in our local bank. The third point is branding. When local bank open branches in Indonesia, it caused the Indonesian community to look up the Malaysia bank. This is because local company that successfully open a business abroad is considered as a competitive company, even though the company only just be established not more than 5 years. The next part is the consequences of penetration market in Indonesia. The first point that we get is Malaysia bank is the smallest size of Indonesia market. As we know, if we want to penetrate our market in Indonesia, we have to compete with largest company that has been started up in Indonesia, which is local or foreign bank, has been in Indonesia in many years compared to our company that new want to start up in Indonesia. And the second point is foreign bank face barriers in terms of licensing and other regulatory requirements. As we know, different countries have a different law and different regulation that we should follow as a foreign company or foreign bank. And normally, as a foreign bank have a quite hard or quite burden the regulatory that we should follow compared to the local company. And mostly the regulatory that we should follow that burden to us is high tax that we have to pay and the limitation in power. And the last point is competitive market. As we know, in Indonesia, many largest company, many good background company, many good name company, and many trusted company and also bank that has been built up in the Indonesia. So we as a new foreign bank want to penetrate our market in the Indonesia, we have to compete with those banks so that we can stay in that market for the long time. Alright, the next part is risk of penetration market in Indonesia. So the first point that we get is the country economy is less stable. As we know, after the economic crisis in 1997 and 1998, the Asian country economy are ups and down, and we cannot predict what will happen in 5 years or 10 years. So if we want to penetrate our market in Indonesia, we have to pay more attention in this risk. Right, the second risk is state ownership risk. State ownership risk of a business is easy to happen if the process of the production is an important product to the foreign country concerned. If we have a good reputation in the Indonesian, we might open in this risk, which is state ownership risk. And the third risk is political risk. The government of the country where the Malaysian bank operate may impose action in terms of tax increase, relation with foreign countries, local political stability, conflict with foreign countries, and so on. So we have to give more attention in political risk, because political risk, if can happen in whatever time without knowing it. And the last risk is currency exchange risk. If one day Indonesian currency are more higher than Malaysia currency, it will make us facing the more losses, especially we have to pay a lot of money to the Indonesian employees. The last point is challenges of penetration market in Indonesia. So the first thing that we will face is the cost of setting up a foreign banking operation is high, and local bank may not have the financial resource to do so if we don't have a strong background in financial. The second point is the competition from well-established foreign bank is fierce, and local bank may not have the experience of resources to compete effectively. And the third point is foreign bank often have a strong brand name and are well known in the foreign banking market, making it difficult for local bank to establish themselves as a leader in this sector. And the next point is preference of the Indonesian government for domestic bank, which is the government will more secure with the local bank compared to the foreign bank. The next point is foreign bank branches tend to be concentrated in major cities, which make it difficult for smaller local bank, which is Malaysia, to compete for customer. And the last point is foreign banks often have a wider range of banking products and services than local banks, which can make it difficult for our Malaysia local bank to compete in this area because we are new compared to the other foreign bank. So that's all for me. Thank you.